Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. Back in January this year, I compiled and published my annual video commentary on LME 3-month copper. Please look at that in the YouTube index to find it, if you haven't already. In this video, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence, recreated here on this daily chart, is the bright red 2009 to 2016 bullish shift pitchfork. And the specific key piece, buried amongst some other colourful ones, is the bright red upper tine, currently at 13,463, that slashes across and just below the last 2 weeks' actions. This bright red upper tine had previously capped prices, despite the one occasion back in December last year it had cap prices until early May this year. It was a key piece of overhead resistance but has been breached and now possibly broken. I started 6 weeks ago looking for the next pattern, and this came down to these possibilities. The first major and still working pattern is the purple November 2025 to March 26 bullish shift pitchfork, with prices in between the overhead purple middle tine, currently at 14,486, and the purple lower time below, currently at 12,827. The second possibility is just about working as a pattern right now, and is one I have been somewhat uncomfortable with, but has shown some interesting influences. It is the possible late December 2025 to early May 2026 reverse head and shoulder pattern, a pattern that is usually considered bullish, though there is a bearish continuation variety. Please note, the bright pink neckline, which is currently at 13,386, is close to the breached bright red upper tine. The market is now just above the bright pink neckline, and I had previously considered the following, which I am happy to repeat again today, and I quote, "Lay out what I consider potentials right now, not targets as yet, but potentials for the move higher. Thus, a primary potential will be up in the 14,747 area, thus above the high of the market. And a secondary harder to reach potential will be up in the 15,271 area, close to the top of my daily chart. I have doubts about this pattern, and I think it is the weakest by a country mile of the ideas mentioned." End of quote. This weakness has been justified, as prices have for most of June and now July been either side of the bright red upper tine and bright pink neckline, though we are over both these right now. I will note these potentials, but I have chosen once again not to mark them as targets on my daily chart for the simple reason that I think other more recent patterns have taken on the bullish incentive, along with their subsequent targets. The third, newer pattern can be seen as either a dark blue early May to late June descending triangle, currently 13,456 to 13,612, or it can be a longer term end of January to late May, possibly descending triangle, utilizing the same base, but with a higher downtrend, which is currently at 13,959. I have not highlighted the second upper trend line of this pattern, as I'm not convinced on this latter pattern, but I thought I ought to mention it just in case. The earlier and smaller dark blue descending triangle has been breached on the top side downtrend, leading me last week to detail some potentials for this pattern. Thus, a primary potential will be up in the 14,210 area, whilst the secondary harder to reach potential will be up in the 15,515 area. For the moment, these are still potentials. The next one is the very recent pattern I would like to discuss, the third pattern. Something I spoke about, well, is it the third? It's the fourth probably now in this case. The next pattern I would like to discuss is something I spoke about 2 weeks ago. Is a mid-June to mid-July small ascending triangle, a small gold uptrend. I spoke about this 2 weeks ago when I said, and I quote, primary target X1 for such a move higher is up in the 13,828 area, a secondary harder to reach target X2 up in the 13976 area. What is interesting about these targets is they are beyond the dark blue downtrend, say it's currently 13669, of the previously mentioned descending triangle. End of quote. Well, target X1 at 13828 was reached last week, and the high last week was at 13934, close enough to the target X2 at 13976 for me to call it reached. This still leads me to the same point I made 3 weeks ago when I said, and I quote, "All this leads me to suspect that with all these patterns we're coming to some sort of cusp, maybe in the next month or two. So watch out, as we could have an explosive rendition after the possible cusp." End of quote. This is still unsettling me today. LME 3-month aluminium. The market here edged out, initially above and now in the last 5 weeks below, from what was originally a bright green April/May 2025 to date bull channel that morphed over time into an April/May to date very large bright green rising expanding wedge pattern, currently 32.28 to 38.18. However, the edging out has only resulted in breaches, extensive breaches I grant you, but just breaches, not breaks, just under this very large rising expanding wedge pattern. The price drop from the upper trend line back at the start of June saw the market falling, hesitating for a bit between the short medium moving average, currently at 33.72, and the important purple middle time, currently 34.90, of the big old November 2015 to April 2020 bullish Andrews pitchfork, and forming a bearish half hesitation stroke bear flag, then dropping down to the medium moving average, currently at 34.15, forming another bearish half hesitation stroke bear flag there, with a subsequent second leg drop down to the 50% Fibonacci line of the March to September 2022 move at 30.76, where they stabilized. 5 weeks ago I said, and I quote, "On this basis, I'd watch out to see if we soon form yet a third bearish half hesitation stroke bear flag pattern around the gold long moving average below, currently at 32.03, and the bright green lower trend line, currently 32.28, of the previously mentioned very large rising expanding wedge pattern." End of quote. We have indeed formed a pattern around these two supports, but it was not, or should I say is not right now, a bearish half hesitation. Instead, we saw the start back in late June of a possible reverse head and shoulders pattern. A pattern that is usually seen as a bullish reversal, though a bearish continuation pattern also exists. Or a possible, but so far unlikely, possible bearish cat's ears pattern. A pattern that's a small double top after an extensive drop, such as the one we saw in June. Looking today, neither of these are, after so much time, neither seem likely, and I'll likely retire these ideas next time. But for now, I'll repeat what I said 2 weeks ago when I said about a primary potential under the bright red neckline, and I quote, "Would be plus $123 and a secondary hard to reach potential would be plus $173 Both of these are for confirmed breaks higher over the bright red neckline. I now watch with interest if this is what the market will do, as further down we have the first of a series of stratified congestions between 30.76 to 30.65 to 30.76, and again between 29.74 to 30.23. That contains the dark blue neckline extension, currently 29.90, the large 2022 to 2024 reverse head and shoulders pattern." End of quote. Now, 5 weeks ago I started looking at the whole 2026 action, as well as earlier from summer last year, as a possible new and big pattern. I saw at the time, and I quote, "This whole 2026 to date structure, possibly even earlier, reminds me of an inverted descending scallop pattern. A thought and pattern I might explore if this move lower continues below the gold long moving average." End of quote. Well, 3 weeks ago I amended that view from a possible inverted descending scallop pattern to a bearish bump and run reversal, with the market then in the run phase. We've all reached the primary target of this pattern at 32.02, and we still have the secondary hard to reach target X down at 29.75, just under the dark blue neckline below. However, in the light of the possible small reverse head and shoulders pattern, I will still consider suspending this pattern until I see if the small reverse head and shoulders pattern has the desired effect. Finally, I should once again like to expand on the purple middle time now above, currently at 34.90, with a very large November 2015 to April 20 bullish Andrews pitch hook. This bullish pattern is still in operation as the upper tine is right now still up off the top of my daily chart, and the purple lower tine, currently at 2667, is down towards the lower end of my daily chart. This leads me on to my final point, and that is, with all these recent actions, we made a monthly key reversal down for June with all the ramifications that may have. Though, to be honest, none of them have really shown up as yet. LME 3-month lead. The market's recent big moves lower has led to 4 patterns forming. The first was the monthly key reversal down for June, finally formed 3 weeks ago, a follow-through lower throughout July. The second pattern is the early May to late June head and shoulders top, a bright red neckline, currently at 1903, just above the market. 5 weeks ago I said about this pattern, and I quote, "We're in the final stages of completing this pattern, so I cannot give targets below," assuming of course it is a head and shoulders top. But I can give an idea of the size of the move should it happen in between my commentaries. Hence, for a confirmed break below the bright red neckline, we'd have a primary move of about minus $50 under the neckline break, and a secondary harder to achieve move of minus $97 under the neckline break. End of quote. We had a break lower below the neckline 5 weeks ago, and I added 5 weeks ago, and I quote, "Since then we have had a break lower, and hence it gave a primary target at 1881, target we reached, and a secondary harder to reach target X1 down at 1834. So the first target was target X at 1881, and that's been reached, and the second one is 1834 X1. End of quote. 4 weeks ago we moved down relatively close to target X1 before backing up a little, but only as far as the congestion around 1888 and the lows of March. I'm watching to see what will happen next, whether we head back down or break higher over the bright red neckline. Now, I said 2 weeks ago that, and I quote, "The only quirk would be if we form a double bottom over the last 3 weeks or so." End of quote. This is still true, but I also added last week, and I quote, "The alternate quirk would be if the market forms a possible cat's ears pattern, a bearish pattern akin to a small double top pattern after a big fall, such as the one we saw in June. I'll wait and watch to see whichever outcome this market chooses." End of quote. Then there is a new pattern drawn 2 weeks ago of a dark blue January to June bearish Andrews pitchfork, which might show some insight into the bearish angle of attack here. Over the last few weeks, prices have bounced up off the declining dark blue middle tine, currently at 1829, twice, showing support, if a declining support, each day they tried. This one is one to watch, though I am of course happy in a heartbeat to finesse it to a shallower bearish shift pitch hook if the market demands it. This brings me to my final point, which is a point I've been making here since the start of 2025 and will continue to do so going forward. At the end of December 2024, we saw the market had created a very large and rare annual key reversal down in LME 3-month lead. Since then, well, we haven't really done that much, especially compared to some of the other metals. Indeed, prices are only about 65 or so dollars lower today than they were at the end of 2024. This is not an endorsement of the annual key reversal down, but neither is it a repudiation of it. Hence, I still say, even now, with prices where they are, that one should look at all things going forward in this year and beyond, here in this metal, in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.